House prices are set to grow by 7% in 2024. In this video, we're going to be breaking down Australia's property market and discussing growth over the next year or two. I'm going to be giving you my thoughts on what's important when it comes to capital growth and why it may not actually be the deciding factor in building a multi-million-dollar property portfolio. Now, my name's Luke and I talk all things real estate, renovating and financial freedom here on the channel. If you could drop a like on this video and subscribe down below, that would really help me out. Now, let's talk about capital growth. That is the golden ticket for a lot of Australians. Yes, a lot of people want cash flow, but without capital growth and without an asset base behind you, you can't build the property portfolio that you need to then give you the cash flow over time. So that's why people will be looking at these 2024 predictions and trying to find the best spot to put their money for growth in the next year. Now, to preface this, I think that's too shorter term thinking. I think you need to be thinking the next 3, 5, 7, 10, 15 years plus. You can't just look at the next year, you need to look at a longer time horizon. And that's exactly what Emily and I have done in our own property journey. Yes, of course, you do need capital growth in the short to mid term. You need growth to refinance, to pull out equity and to go again in terms of buying your next investment. But you also need to look at that long-term game of property investing and holding the right assets through cycles to see capital growth. Now, the other thing is you can also manufacture value. So Emily and I have focused on cosmetic renovations ourselves. So you could look at doing a cosmetic renovation or doing developments to fast track your journey. So you need to look at both manufacture value and capital growth in the short, mid, and long term to build out a property portfolio that's going to give you choices. So let's break down the numbers of what we're expecting to happen in 2024. So a quicker than expected housing recovery triggered by the relatively low supply of listings and the resurgence of buyers could propel home prices as much as 7% higher nationally throughout the 2024 financial year, according to a panel of economists and analysts. Home values have already risen 6.3% in the 6 months to September 2024, according to CoreLogic, a rebound that has defied the fastest rate rising cycle in 3 decades after demand initially cooled. Now, that's really been the story of 2023. After these 13 fast rate rises by the RBA, everyone is expecting the property market to cool off because the talk by a lot of economists and a lot of property commentators is that interest rates are directly linked to property prices. But interest rates are just one of many factors that impact the supply and demand of property. Of course, making it more expensive to hold and own your own home or an investment property is going to lower people's ability to pay for investments or to pay for their own home. And these changes will lower people's access to getting into the property market. But on the flip side, if we have hundreds of thousands of migrants coming into Australia, as we've seen over 500,000 migrants move in over the last 12 months, then the supply and demand equation can still favour towards more demand outstripping supply, and hence the increase in property prices that we've seen in 2023. The momentum supported unanimous expectations that house prices nationally would increase in FY24, according to a survey of 10 economists. Jarden chief economist Carlos Cachot expects a 6.5% increase in house prices nationally. Now, you've got to remember, this is a national prediction, and there's going to be states, there's going to be capital cities, there's going to be major regional markets, and then there's going to be the suburbs within those locations. So this is very high level, talking about a 6 or 7% increase in prices. Some areas might see 15% growth, some might see 1% growth. So let's dive into some more detail. The key drivers of this increase are expected to be continued limited listings, so the lack of supply, particularly family homes, along with positive sentiment towards housing given households' expectations of the RBA easing next year. That said, we don't expect rate cuts until late 2024 at the earliest, which may challenge this positive sentiment. Now, this is one of the things that's really blown my mind, is that people are expecting these rate cuts in mid-late 2024, and that's only going to put more pressure on property. So with Australia's population growing and expected rate cuts late in 2024, and again, we're focused on the Southeast Queensland market and looking at the infrastructure and growth, and obviously everyone's talking about the Olympic Games in 2032. That's why 2024 might be a great time to buy and invest, not just for the short-term factors, but for the mid and the long-term factors here in Southeast Queensland. Now, you need to take my bias into account. I have over $3.5 million worth of property in the Southeast Queensland market myself, and so there may be more suitable markets for you. It's about understanding your strategy, understanding your situation, and looking at where you want to be and what properties are going to help you get there. One property might suit one investor, as another property might suit a different investor. You need to find the right property for your circumstances. So earlier this month, the Reserve Bank said it was keeping an eye on the turnaround in the housing market, which has pushed prices nationally close to the peak of April last year. And we've actually crossed the peak in terms of property prices late in 2023. Now, as you can see here are the forecasts of home prices nationally in FY24 from a number of property analysts. So SQM Research is saying between 6 to 8%, AMP is saying 7%, Ray White's saying 4%, Australian National University 2%, 5%, 4%. So there's quite a range here between 2 to 7%. So maybe we'll see growth around that 4 to 5% mark in 2024. Again, it's going to be location specific. I think national is just too big a picture for people to get any useful information out of. SQM Research's Louis Christopher expects the biggest price increases. He predicts that Sydney house prices will rise by as much as 11% in 2024 and Melbourne prices by 7%, highlighting the expected surge in immigrants this year. But those forecasts are contingent on stable interest rates. Now that's really interesting because if you look at the data as of today, Sydney, Melbourne and Hobart have actually not had as much growth as Perth, Brisbane and Adelaide. And so the month-to-month growth in those secondary capital cities has been a lot stronger the last 6 months. But exactly like Louis Christopher's saying, if we see more migration into Australia, most migrants are going to go to Sydney and Melbourne first, and hence the pressure on the supply and demand equation in those locations. So to wrap this up, let's take a look around Australia at what's happened in 2023 and some of the forecast growth in 2024. As you can see here, Perth has been the strongest performing capital city in 2023, up 12.3% on average, followed by Brisbane and Adelaide. Sydney's also had some strong growth, while Canberra, Hobart and Melbourne have really been stagnant in 2023. But looking out to 2024, Brisbane, Adelaide and Perth are still showing strong signs. Whereas again, Sydney, Melbourne and Hobart are seen as somewhat mediocre at this point in time with their growth potential. And there's a lot of differences between what some economists are saying. So I think it's really interesting to see these forecasts and look at the prime locations for growth. And these are generally the more affordable areas in my opinion. If you're able to break into the property market between 500,000 and 900,000, that's where I think there's going to be strong demand in the next 3 years. Price points between that 500k to 900k are going to attract first home buyers, homeowners, investors and overseas migrants who move into the country and get their permanent residency status. So take that all into account. When you're looking to buy borderless, if you're looking to buy in Brisbane, for example, and use our services, or you're looking at Adelaide or Perth, or you are planning on buying in Sydney and Melbourne because you do think there is going to be that underlying demand continue to grow, then just make sure you're doing your due diligence. Understand your local suburbs. Look at some of the data. Look at the price forecast. Look at the median price points. Buy below the median price as well. So when we look at this map of Australia, I think we're primed for growth again in 2024, given all of these supply and demand factors and the expectation of a stagnant RBA interest rate. The real thing that's going to be stopping most Australians is their ability to access the finance to actually break into the market and hold an asset base. Like I said at the start, growth or capital growth in a property is very important. But even more important, in my opinion, is having and being able to build and scale the asset base. If I can build a $10 million portfolio that grows at 10% a year, and someone can buy a $1 million portfolio that grows at 13% or 15% a year, yes, they might have some better growth, but I have the larger asset base. And so the great thing you need to think about is that if you can build the asset base, you're going to get that diversified portfolio and you're going to be able to get capital growth compounding on a larger base, which means more money in your pocket, creating more equity and in turn more cash flow over time. Now, this is the thing most Australians struggle with. Most Aussies are going to struggle to get from 0 to 1 and 1 to 2 properties. It's the hardest hurdle to get over. But once you get from 1 to 2, getting from 2 to 3 is a lot easier, and 3 to 4 and so on. I know for Emily and I, we've decided to go with some larger purchases rather than buy bread and butter properties around the 4 to 600k mark and build out our portfolio that way. But you need to look at your own circumstances. Buying 3 500k houses might suit an individual if it allows you to step and continue to grow the property portfolio, and you don't have the borrowing capacity to buy a $1.5 or $2 million asset. So you need to look at your own circumstances. For Emily and I, we didn't want to have 10 or 15 investment properties. We ideally wanted to have a larger asset base with some larger price properties. So we bought our first 3 homes between $500K and $800K, and then we eventually bought the unit block in Coffs Harbour to scale our property portfolio quickly and to have a much larger asset base with just one purchase. So make sure you look at your own situation, work out whether you think Brisbane's the right area for you to invest in, both from a short, mid and long-term growth potential. And if you want to work with us, head over to purposeproperty.com.au. You can book in a free strategy session with myself. We'll sit down, chat about your situation, chat about your short, your long-term goals, discuss our processes and get the ball rolling from there. And we also offer renovation services for clients only. So if you want to get both capital growth and manufactured value, you can sign up for clients only for our renovation project management services. We charge a straight 20% fee and we manage the entire project for you, looking to get $2 for every dollar spent. So head over to purposeproperty.com.au if you're interested in our services. Otherwise, I'd love to hear your thoughts down in the comments below around where you think property price growth is going in 2024. And make sure you click this video over here if you're interested in seeing what the RBA might do in terms of interest rates in 2024. Thanks for sticking around. I'll see you in the next one. Peace.